Hi, this is Dr. Trader. This week, we're switching over to dollar-yen. The yen is languishing near a 4-decade low. Japan's finance minister says he's ready to take decisive action on the currency market. The US Treasury is publicly calling on the BOJ to keep normalizing policy and raise rates. Two warnings at once, but the pair keeps climbing. Why? Because US yields are winning, for now. According to NEXUS, the bias on dollar-yen this week is bullish, but conviction is only low. Here's the sequence this week. Japan's core CPI for June came in at plus 1.6% year-on-year, still below the BOJ's 2% target, marking a fifth straight month of missing that target. That should have been dovish news for the yen. But right after, Japan's finance minister warned of readiness for FX intervention. The US Treasury, which rarely comments on another country's policy, publicly called on the BOJ to keep tightening. Meanwhile, US core CPI released July 14th missed too, coming in at 0.0% against a forecast of 0.2%. But the dollar didn't weaken. US Treasury yields rose on Middle East tension and trade war inflation fears, pushing the 10-year real yield up to 2.39%. This is the most important part. The rate differential between the Fed and the BOJ is the most extreme divergence in the G7. That's the main engine pushing US dollar-Japanese yen higher. Technicals agree. Daily, weekly, and monthly are all aligned bullish. That's the highest technical convergence this framework can produce. But there's a real counterweight. If the BOJ hikes unexpectedly, or if Japan actually intervenes instead of just warning, a carry unwind can trigger. That's when investors simultaneously close out yen-funded positions in higher-yielding assets, and US dollar-Japanese yen can fall very fast. That exact conflict between the two stories is why conviction is only low, not the direction itself. US dollar-Japanese yen is currently trading at 163.796. The weekly VWAP sits at 163.802, meaning price is right at and slightly below that level. Under the NEXUS framework, a sustained close below weekly VWAP signals that short-term momentum is running against the bullish thesis and calls for reducing position size. The weekly trend SL sits much lower at 159.729, roughly 4 big figures below current price. That's the structural invalidation level for the entire bullish thesis. Only a weekly close below that level breaks the structure completely. Multi-time frame alignment is fully bullish, with no time frame out of sync. NEXUS keeps the overall bias bullish for US dollar-Japanese yen this week, but conviction is low. This is not a strong buy signal. The bullish case rests on the rate differential and full multi-time frame technical alignment, both real and solid pillars. But it's being offset by BOJ hawkish risk and the real possibility of actual FX intervention from Tokyo, not just verbal warnings. When two big stories coexist without either one clearly winning, low conviction is the honest read. Position size should reflect that fragility. Two key levels heading into next week. First, weekly VWAP at 163.802. Price needs to hold above it for short-term momentum to stay aligned with the thesis. Second, weekly trend SL at 159.729. A weekly close below that fully invalidates the bullish structure. Beyond those two levels, one more thing matters. If Japan actually intervenes, not just talks about it, or if the BOJ hikes unexpectedly, reassess the thesis right away and watch how price reacts at both levels. Keep watching US CPI and jobs data, plus the Middle East situation. In short, NEXUS keeps a bullish bias on US dollar-Japanese yen this week, but conviction is only low. The rate differential and technicals favor buyers, but BOJ risk and intervention risk are still hanging over the pair. Thanks for watching. This is a weekly analysis built from the NEXUS research engine at Intermarket Edge. If you're interested in macro and intermarket analysis, follow the channel for future updates. This content is for informational and educational purposes only, not investment advice.